Okie dokie. A wonderful Tuesday, everyone. Hope everyone is doing well. I hope you can hear me. Sound quality is good. I at least see the little voice icon jumping. So I assume you can hear me and the audio is working. Welcome to today's KDeFi Twitter space. We're doing those every Tuesday. 12:30 Europe time, 6:30 p.m. here in Singapore, 6:30 a.m. Eastern Standard Time. Uh, we are always doing them discussing various topics in the crypto space, talking the markets, talk about what's happening in the company. And it's always myself, CEO and co-founder of the company. And then we also have our head of community, Fabio, that I think pretty much all of you know who have been doing anything on social media or anything in our communities. Um, for today, main topic is, I think, the topic right now, which is Bitcoin spot ETF. Tomorrow, Wednesday, is the last day for the SEC to give a decision on the Bitwise spot ETF. Next Wednesday is the last day to give a decision on the Grayscale Bitcoin Trust spot ETF. We would love to discuss both of those decisions. Obviously, decision at the recording time not has been made yet. So maybe if you're listening to the recording, maybe you have more information. We're gonna try to separate any kind of facts from our own personal opinions. And at the same time, we're gonna try to analyze the probabilities, try to analyze consequences. Could a spot ETF be bullish? Could it be bearish? Would it be a non-event? Would it be better that the spot ETF does not get approved? Would it be better that it gets approved? And I think that's a main focus at the moment. If we're just reflecting on the past week, a couple of things, obviously from our side, I shared on Twitter that on Cake side, we had one of the strongest weeks in customer growth in our company history. This kind of shows how people definitely want to have cash flow in their crypto. They just want to have this in a transparent manner. And looking what's happening in all the kind of lending and other platforms, I mean, it's pretty incredible. I mean, Cake is pretty much the last one standing. You look at Celsius, BlockFi. Now there's even rumors around Nexo having issues. These are unconfirmed. I just want to be very clear there. We had entire issues here in Singapore with HODL. There have been issues with partners for Celsius, obviously Three Arrows, Babel Finance. I mean, it got left and right, and it was just absolutely crazy. And I think, obviously, a company like ours that's completely transparent about our services benefits from that. Sadly, in a way where customers on these platforms are having issues. So I really hope that all you are losing in those platforms is trust, but you're not losing the funds, and you can actually get your funds back out. And then, maybe this is then a bit of a wake up call that at the end, sure, it's always not your keys, not your coins, but if you entrust your keys to another platform like ours, then you do this in a manner where the company is extremely transparent about what's happening to the coins. And so, I hope, you kind of see the merit in that. Quite interesting in 2019 when we started Cake, no one really cared about transparency. Now it's like everyone does. So I think, quite an important matter. Another thing I shared, we had an HR update today. We've grown 60 team members year to date. This is absolutely bonkers. We're hiring, we are still spending, we're growing. We are, for us, sure. I mean, we also feel the pullback in prices, of course, but our situation is, way different than I think most other companies. We actually just closed a deal in our venture fund. I hope there's going to be an announcement by them at some point. They're in the crypto space, and then with quite some interesting deals happening that are outside of the crypto space, where we think we can have some really, really strong kind of collaborations and partnerships. Hopefully, we have some news to share there as well. So for us, we really believe in be greedy, when others are fearful, and be fearful when others are greedy. And obviously, if you have a strong business, then this makes this way easier. And yeah, we are planning our next company get together where we're getting everyone in the company together for team building, team bonding, looking for a larger office in Singapore. And all of this on our side is not done in a crazy kind of let's hire now 600 people. We don't even know what to do and in kind of manner, but this is really like a step-by-step manner. And we do have, for example, hiring stops in some teams, not because of the economic situation, but just because I want to keep the teams lean. And so, yeah, I'm like, okay, we hired 3 people in this team now. We're not going to hire 3 more. Let those 3 people settle in. Let them get that feeling of, oh my goodness, like the work we're doing now with the 3 of us should be done by 7 people. Great. Now you can hire your 4th person, right? That's kind of that startup mentality that I love to have as a CEO. And it doesn't matter if we have 100 and whatever, 30, 40 employees in a company, or if we just have 10. At the end, it's always I think this feeling should always be there, that you always kind of want to have this feeling, oh, actually, we definitely would need another person here. And that's just that right feeling, because that kind of makes you focused. That kind of doesn't make you come up with stupid ideas, because you're going to focus on the essential things. Yeah, there's I think a very famous saying: a healthy person has 100 problems, an unhealthy person only has 1. And the key idea behind this is focus. Of course, you don't want to be that unhealthy person, but the actual skill in life is, when you're healthy, not to kind of think about all these 100 things, but to really kind of put that energy onto these 1 or 2 things. And yeah, be like uh, the mirror glass that kind of bundles the sun rays together and burns a hole into something with all that energy. And you don't do that by focusing on 60 things, but yeah, but you're focusing on a few things. And many times when you have way too many resources, right, it's always a bit of an issue. Too many resources actually quite dangerous. The most powerful people actually don't have so many resources. They're just very resourceful. And we try to have team members. It's actually one of our team principles. And so, yeah, one ways we do that is that team members, they don't sit there and be like, okay, I can do 6,000 different things because I have so much time and we have so many people. The goal is always that team members feel like, oh my goodness, I could do 9 things. I only have time for 3. Which 6 do I have to cut? And I think that's always, yeah, it's always the most powerful way, in my opinion, to be really focused, be productive, and keep a team lean. So yeah, just want to share that a bit. Other than Bitcoin spot ETF, and that's the main topic for the day, market's been relatively quiet. We closed under the 200 weekly average again yesterday on Sunday. So let's see what that's going to do. Yeah, that's pretty much all I have to share before we go into the topic. Fabio, first of all, thanks so much for doing this, taking the time. What's the sentiment from your side in the community right now? What's happening? Are there other things that from your side to share other than Bitcoin spot ETF?
We definitely are in interesting times, and regardless, even though this is like a big week ahead or a big month ahead, it feels like a super boring summer. On the community side, we of course we track all the data, so how many messages we get, for example, in customer support or on Telegram, how many interactions or likes or engagement we have on other socials. And you can really see this, and this is not exclusive to Cake. This is a broader issue in the crypto sector. If you have downside action, price action, if the price is going down or the price is pretty much going sideways since a week or two, then the interactions are super low. People are, I would say, there's somewhat of complacency. So people are just not interested in anything happening in the crypto sector. In the past, it was as soon as the price recovers, as soon as there's something in price happening, the interest is back, and these things tend to switch really, really fast. But right now, like I expected when we were in 2021, when we were in a bull phase, I was always a little bit scared of the bear market and how this will affect the spirit or the sentiment within the community, because I'm exposed to this so much. But I have to say, like, people are very constructive. We don't see a lot of frustration, sadness, and or anger. Of course, there's always a few people that need to voice their frustration on a social channel, but in general, the sentiment is pretty constructive and pretty neutral, at least within our own community. We might have the advantage that we have a certain kind of user. So our users are more, they have a long time horizon. They usually like to hodl. And of course, getting some additional yield, which is super nice in a bear market. Yeah, so I don't know what else to add on the sentiment side. It's kind of hard to track because the sample size is just not that big when the interactions are lower than usual.
Yeah, definitely. Cool. Let's go into the actual topic. Let's go into Bitcoin or spot ETF or anything else we need to mention, highlight, point out.
Maybe just to add on, you made a point on transparency, and a general feedback that we got on our social and on Telegram is that people would love the one place to rule them all, to practically track the transparency of a company, and we kind of don't offer that in a really extensive manner right now. We do have the masternode pages and the staking pages and all these where you can track each individual masternode with addresses on chain, but it's fairly technical. So if you don't know how to use an explorer, it's actually kind of difficult to go into this transparency section. So what we want to do, and this is generally based on the feedback that we got from the community, they want to have a page to track everything. So where all the addresses are listed, where they can have some insights in what is actually going on. And we are currently working on fulfilling this wish. So we are working on a transparency page, and no ETA yet, but I'm fairly confident that we can launch this sometime soon. And
have you seen what Sean made over the weekend? He posted it in
no.
water cooler. Oh, really, man? I need to share this afterwards. u-zyn showed it to me this morning when we had breakfast. Yeah, I was quite amazed. One of our team members, he built a transparency page over the weekend, purely based on the public data that we have. So no data that you couldn't kind of pull, and he used public available stuff. It's quite impressive, actually. I was shocked all the information that someone can just get publicly. I mean, yeah, I mean, when I talked to DC about this, he also, I mean, his dashboards also, I mean, they use so much public data. So, but let me send that over to you afterwards. I think we can share that. I wouldn't see why not. Obviously, that's completely on a personal kind of thing from one of our team members who did this over the weekend. Yeah, it's quite cool. Yeah.
Cool. Yeah, definitely. I will check the channel right after the Twitter space.
Yeah.
Are you opinionated on the outcomes for Bitwise and Grayscale? You have
I am, but maybe first, why don't I just give it like a really quick kind of rundown on spot versus futures, and then we talk about what does the community think on the probability of the approval, and then let's go a bit into the consequences. How does that sound? Just so we have a bit of a thing there, and yeah, cool.
Perfect.
Okay, so first and foremost, I think most people, when you talk to them about an ETF, most people have a bit of a wrong sense of what an ETF is. Many people always kind of assume that an ETF is something that's passive, so that just kind of tracks something. And they always kind of compare that a bit to like the traditional old kind of funds. But what an ETF actually is, it's a regulatory wrapper. So it's nothing else than a parcel. And the way this parcel gets defined is a very standardized regulatory thing in the US and in most jurisdictions. And there's a lot of requirements that come into this, and a lot of definitions. And there's also certain accessibilities because of the standardization. So, but at the end, an ETF is nothing else than a wrapper. So an ETF does not mean you have a low cost. An ETF doesn't mean that this is something that's passive. It just means it's a wrapper. And you can look at ARK, for example, ARK-K, very famous Cathy Wood. ARK is an ETF, but this is like actively managed, and some of the fees are not very low. So it's purely a wrapper. And so the only question with that wrapper is what comes into this wrapper. And we have seen all kinds of stuff getting packed into that wrapper. Obviously, we have seen anything from stocks into commodities, into precious metals, into bonds, even real estate stuff. We call those REITs. These are not really ETFs anymore, but they fall in a very similar kind of category because then you start kind of packaging those REITs into ETFs. So a lot of these kind of ideas always kind of get wrapped into those wrappers. And no, not last year. Yeah, I mean, quite some time ago, on the Chicago Mercantile Exchange, it was 2017, Bitcoin futures were approved. And just to be clear, a Bitcoin future is nothing else than a bet on a price of Bitcoin at a certain date in the future. So you just bet on what the price is. And the reason why this is relevant, that it was approved on the Chicago Mercantile Exchange, on the CME, is because that is regulated by the SEC. There is not a single spot exchange, and spot just means that you're basically exchanging a price right now. So if I trade something spot, Bitcoin spot, you give me the Bitcoin right now and I give you the money right now. On a future, you actually give me the Bitcoins in the future, or maybe you don't even give me Bitcoins. You give me a dollar amount that these Bitcoins are worth. This would mean it's cash settled, not physically settled. That's actually not so relevant in all of that. The really relevant part is that in the US, we don't have an SEC regulated spot exchange. So Coinbase, yes, it is listed on the stock market, but the exchange itself does not fall under the SEC regulations. So that means, and this is also important, Coinbase doesn't have to disclose trades or doesn't have to disclose kind of the insider dealings that are happening in there. And there's a lot of allegations always constantly that, I don't know, these exchanges are front running or they're doing some very questionable things, right? So there's not a single exchange that's regulated by the SEC. Now, why is this relevant? Because the SEC always takes a bit of an issue when something gets put into these wrappers where they don't really have an oversight over. And you can say these are a lot of excuses by the SEC because the SEC wouldn't really have that for gold either, because a lot of gold is actually traded in London. And you could kind of make this case for a lot of other kind of things that get put into those wrappers as well. But the SEC in the past has used this excuse for so-called spot ETFs. So that means that actual Bitcoins get put into this wrapper to keep rejecting them in the past. And so in 2017, the Chicago Mercantile Exchange approved futures. And this actually led and built the foundation that last year in Q4 2021, we actually had the very first Bitcoin futures ETF get approved. And here, the SEC didn't have much of a chance to reject those because this would then mean that a product that gets traded on a SEC-regulated platform, the CME, and CMEs doesn't have spot Bitcoin, and we're going to discuss a bit why this is so different. And in this case, the SEC would have said, oh, it's fine that this gets traded on a SEC regulated exchange, but it's not fine to put it into an ETF. And that would have been a bit of an issue. And so that is why last year also, if you listen to the shows here, I was very bullish or very confident that a Bitcoin futures ETF was going to get approved because of that. And it did. And now we are in the situation where constantly over and over again, a so-called spot ETF kept getting rejected. And it's not only that the SEC doesn't have a regulated kind of counterparty in the US that actually trades spot Bitcoin. It's also that the SEC can really use this as a really welcome excuse to kind of go in and say, you know what? And then on top of it, we have Tether, and on top of it, we have Satoshi, and we don't know who this is. And then on top of it, Bitcoin gets so manipulated by the whales, and you have so much front running and all of that, right? And so with all of that, this is what's kind of being kept used as an excuse, as a reason why not to approve the Bitcoin spot ETF. Now, tomorrow, Wednesday, is the deadline for the Bitwise spot ETF. And the reason why it is important is because the Bitwise futures ETF was the one that got approved last year. So it's obviously quite remarkable that the futures ETF got approved, and now we have the spot kind of counterpart. And then next Wednesday, we have the final day for the SEC to approve or not approve the Grayscale Bitcoin Trust conversion into a spot ETF. And just for reference, a trust, again, is a bit of a different setup. A trust, for example, and that's a key concept that we're going to discuss. you cannot arbitrage the trust. So you cannot buy part of the package, then take this stuff out and then actually sell this yourself. So you can only trade the package, and whatever is in the package has to stay in the package. And in an ETF, you can actually arbitrage that. So you can go, you buy part of that ETF, and then you say, you know what? I want what's in this package now. So give me those Bitcoins right now. And then you get those Bitcoins and you can sell them yourself on the open market. So it's just a package that has stuff in this. In a trust, different settlement times, different trading times. Many times, for example, a trust only trades once a day, so you can only go in and out once a day, has completely different disclosure rules, has completely different transparency rules, has different arbitrageability rules, has completely different accessibility for funds, for pension funds, for 401k pensions of Americans, and so this is very different, right? And so, but the Grayscale Bitcoin Trust has become notorious because it is by far the largest Bitcoin investment vehicle in the world. It has tens of billions of dollars in its trust, and it has raised a lot of it gotten a lot of fame because of like last year, in 2021, it was trading at a so-called premium. So everyone wanted to get exposure to that Grayscale Bitcoin Trust to get into Bitcoin. And now this trust has been trading at a massive discount. It's actually trading at record high discounts of 33%. And we're going to discuss those because this is going to be a very relevant factor when we talk about price and we talk about what actually is very likely to happen if a Bitcoin ETF was going to get approved. Yeah, so these are kind of a bit the facts right now. So we have Bitwise tomorrow, Wednesday. We have Grayscale Bitcoin Trust next Wednesday. Both are very remarkable because one is extremely large with Grayscale and the other one got approved by the futures last year. And so obviously two massive decisions. And also from a probability standpoint, if one of them gets approved, it's very likely both of them get approved. If one of them gets rejected, it's very likely both of them get rejected. The SEC has, or Grayscale has already mentioned several times that they would sue the SEC if their ETF conversion does not get approved. And so obviously they also asked for a lot of comments, and there were messages where 12,000 people actually made comments to the SEC, and 99% of them were very positive and encouraging the SEC to do such a conversion. So a lot of kind of eyes focusing on that. It would be an absolute groundbreaking kind of change if the US would approve that. Yeah, with kind of that background, I don't know if I missed anything on the basics, Fabio. Then please add that. And then, yeah, what does the community think right now? What do influencers think? What does the media think? What have you kind of been reading? What is the probability of those ETFs getting approved?
Yeah, sure. I knew we made an agreement that we are talking about the ETF, yay or nay, today. So I came prepared. I looked into some data, and there is a few interesting points I want to add. And that's I have my data out of the Arcane research paper that got published in May. And now listen to this. We have so if you group up exchange traded products or exchange traded funds into regions, you would say, hey, America is the strongest region, and there was such a big fuss about BitO and Bitwise ETF and Wildfire ETF back in November and October last year. And then you would say like BitO, so ProShares, they even announced that this is the best start of an ETF ever launched. So you would say, oh my God, there has to be big volumes and so on. But if you compare the United States to Europe and to Canada, which both of them already have spot ETFs and ETPs. So Europe currently 93,000 Bitcoin in volume. So 93,000 Bitcoins are currently traded in exchange traded products and exchange traded funds. In Canada, 75,000 Bitcoin. And then if you compare this to all ETPs and all ETFs in the United States, it's only 27,000. So there is a big gap between Europe and Canada, Canada, and the United States. And a lot of people, they have the hypothesis or the theory that this is all going to change with a launch of a spot ETF because this is what investors want. this is what makes the most sense, and so on. So there's a lot of hope and a lot of eyes on these spot ETFs. So the community sentiment currently, if you go on social media, and I tried to, this is of course anecdotal data. So the things that I see is a large majority of people actually think that the Bitwise ETF is going to be declined and the Grayscale ETF is going to be approved. This would, of course, have a few implications, and I think you already had a several good conversation, I think, with Crypto Man Run, so Ran Neuer. You had a few interactions on Twitter talking about that, because it's not talked about that much.
No.
And before I go into that detail, I would love to give you the word and try to explain what the implications of a Grayscale ETF approval would mean, because it's quite complicated to understand. Yeah.
Okay, before I do that, can I first understand why do they think Bitwise gets rejected and Grayscale gets approved? I don't understand that. And I haven't seen I haven't kind of filtered much with the community. I haven't looked much on the opinion there. I don't know if other influencers have a different opinion than I do. I am not a person that cares so much about other people's opinions. I try to get the underlying facts and then try to build my own opinion around that. So I want to understand, why would someone say, what is the reasoning that Bitwise gets approved, doesn't get approved, but Grayscale would? I struggle with that opinion a bit. I don't understand the reasoning. Do you understand the
Yeah.
reasoning?
I also don't really understand the reasoning. It comes down to, I guess, the reach. So nobody really knows about Bitwise and nobody really cares. Everybody just talks about Grayscale because I guess they already have this big trust and they have a big name in the space. So everybody's with their eyes fully focused on that ETF. If I would like give a percentage in how many people talk about Bitwise and how many people talk about Grayscale, it's probably like 9-to-1 ratio. So 90% of the people only talk about Grayscale, and 10% of the people they bring up the Bitwise ETF. So maybe it's not that people, as a consensus, tend to agree that one will be rejected and the other will be approved. I think it's not even known that we're going to decide, I think, tomorrow or by the end of this week. I'm not actually sure. Tomorrow the meeting and Thursday the decision, or I'm not actually sure on the
Now, I think
timeline there.
tomorrow's the deadline. Yeah, tomorrow's the deadline. I think it's always a deadline, so it could be that the SEC makes gives a feedback today. And as far as I also understand, it's more like, if the SEC hasn't made a rejection by tomorrow, then it simply goes live. So it's more like, this is the deadline, as far as I understand. So I'm definitely not an expert on the exact procedure, how the rejection or the approval works. As far as I always understood this, and again, this is very this is like very minor on the things, but as far as I understood this, it's just basically waiting if the SEC makes a rejection. So if the SEC doesn't make a rejection by tomorrow night, and you're definitely going to figure this out, then it should be then it should be basically then approved. So that's as far as I always understood this, and the same with the SEC, with Grayscale.
Okay.
Let's go. Okay. Great. So community thinks Bitwise rejected, Grayscale gets approved. Okay, my personal opinion is, based on all the data and facts I have, I think the probability of any of them getting approved is in the single-digit percentages. So I think we have over 90% chance that none of them get approved, for the simple reason the facts haven't changed since the SEC has been rejecting all the other spot ETFs. The reasons haven't changed. We still don't have a regulated exchange in the US that trades Bitcoin spot. Nothing around Tether has changed. Nothing around Satoshi has changed. Yes, yesterday Gensler came out and said that Bitcoin is treated as a commodity, which definitely is fantastic on a long-term regulatory view for the US. But that, again, doesn't change the underlying issues that the SEC has highlighted in the past. So I personally would very much expect that both ETFs get rejected based on this argumentation. So I would highly then expect that Grayscale is definitely going to go into, I would highly anticipate that it's going to go into litigation and is going to challenge that from a legal standpoint. The SEC is just going to play for time, because such things would take years. And by that time, I would say either CME actually does a spot, which is unlikely though, because they're generally very focused on futures, or much more likely, one of the three large exchanges in the US, Gemini, Kraken, or Coinbase, maybe another player, maybe FTX or maybe Binance or someone actually comes in. But I would say one of the three large players at the moment steps in and actually becomes an SEC regulated exchange. And then I truly believe the argumentation for the SEC starts to fall apart in order to not approve a Bitcoin spot ETF. Because if the SEC has a regulated exchange for Bitcoin spot, then at that moment, they are basically approving that. And then all the other reasons around Tether and around Satoshi being anonymous and being in theory a potential threat, or any kind of code issues or any kind of insider trading, anything is being put on the exchange. So it actually has nothing to do anymore with the futures. So all this is put on this regulated entity. And so I then would say it's very unlikely that we don't see the approval. And this could simply happen next year. And then everything would be approved next year. And I think next year, we're going to see the probability of a spot ETF in the US shoot up dramatically. Yeah, this year, still quite questionable. But that's personal opinion on all that, based on the underlying facts haven't changed. So I'm not going to change my opinion. Great. Let's kind of think two scenarios through. No spot ETF. What's this going to do? I do believe, though, that all the big money, all the funds, a lot of the larger kind of investors, they kind of have a similar opinion. And the reason why I think that you see in the institutional products right now, I mean, I think just over the last 7 days, we had record outflows out of institutional kind of products. I think we had close to $500 million flowing out. We see Grayscale having a 33% all-time high discount in their trust, right? So if there would be any anticipation that there would be any kind of ETF approval, this discount would have to shrink dramatically, right? And it's not. And so all the signs that I just see point that this is what the market expects. So if the ETF gets not approved, which I'm expecting, we may see a little bit of a bearish kind of dip, but I don't see any fundamental change. I mean, it's probably just going to be a blip in the entire signal. But there's so much noise at the moment with what's happening with inflation and what's happening in Ukraine and what's happening with the money printing and what's happening to the economy and a recession, that this Bitcoin spot ETF is just a blip. I think this has almost no impact. So I would almost treat this as a non-event. So for me, the entire next 7 to 8 days are a non-event. That's how I, as an investor, approach it. But again, I could be wrong, right? So no financial advice. These are pure personal opinions. Kind of keep this in mind. I invest my own money. I'm in charge of my own money. I'm in charge of my own results. You invest your own money. You are in charge of your own results, right? And never invest your money just because someone else says that's what they are doing. You need to, it is your money, your life, your results, right? So very, very important. Great. Let's do the more interesting scenario, and that is what happens if a spot ETF gets approved. Okay, let's do the scenario where just the Bitwise spot ETF gets approved. To me, that's the most unlikely scenario, right? That just Bitwise gets approved. I think this is almost impossible, but like I would say this is less than 1% probability. Just the Bitwise ETF, no Grayscale. That scenario would probably be very, very bullish. So that scenario, in my opinion, would actually drive the Bitcoin price simply because of the hype, right? And that's important, not because so many people can now invest into Bitcoin that couldn't invest prior. Sure, there will be some purchase power out there that hasn't had a chance to actually get exposure to Bitcoin, but there's so many ETFs already that you can invest into that has Bitcoin exposure, where I would almost say that the purchase power that's coming into a spot ETF that before that didn't have a potential exposure to Bitcoin, I think that percentage is super minuscule. I think it's almost irrelevant. I think it's way more the hype, it's way more the narrative, it's the media, and that could significantly drive and turn around any kind of bearish kind of sentiment that we're seeing right now. Again, very, very small probability in my book. If you calculate this differently, this is really up to you. Now, we have the more interesting scenario for me. So no ETF, quite neutral in my opinion, just Bitwise, that would be bullish. The more interesting question is if it's either just Grayscale or if it's Grayscale and Bitwise. And I think there's almost no difference in those two scenarios, right? Because first of all, most people would anticipate that both would get either approved or both would get rejected, but it does not really matter as long as Grayscale is involved. We have a very cautious setup, and this may be surprising. And for this, I need to kind of take you back to the beginning of 2021, or actually the end of 2020. And this actually has a lot of players involved that have solvency issues over the past couple of months. And there's no surprise that these players have solvency issues. And you could have probably seen this coming over the last 18 months. And it all started at the end of 2020 when this Grayscale trust was still relatively small. I mean, we're talking about a couple of billions of dollars. And this Grayscale trust had demand from institutional investors with Bitcoin doing well in 2020. Remember, let's take this back. 2020, we had COVID crash in March, money printing started, and Bitcoin went from the beginning of the year 8 to 10,000, and it finished the year in 2020 at around 30,000. It had this dip down in March 2020 to 3,000, and then continuously drove up, crossing the old all-time high of 20,000, pretty much exactly 3 years later, around mid-December 2020. And so with that, obviously, suddenly institutional demand came in. This was also the time when Saylor started promoting all the institutional investing. And so with that, institutional demand came. And Grayscale, which was relatively large, but not like humongous, not tens of billions, but just a couple of billion, saw inflows into their trust. And now here comes the important part, how you have to understand how this trust works. And this is absolutely essential for you to understand, so that you can really understand how this works. The trust works. Someone has to basically put Bitcoin into this trust, right? Because if there's no Bitcoins in there, then the money that would go in there would basically more money would buy the same Bitcoins. And this means that the Bitcoin trust goes up in price. So in comparison to the underlying Bitcoins, right? So if Bitcoins were trading at $20,000, if there's not enough Bitcoins in that trust, people would be buying the same amount of Bitcoins in that trust, and the price of the trust of GBTC versus BTC, BTC is at 20,000, GBTC could be at 22,000, so a 10% premium. So how do those Bitcoins go in there? Well, there's several ways how they could go in there. Well, first, they could go in by Grayscale. Grayscale themselves could put the Bitcoins in there. However, them putting them in there takes, first of all, capital, and second of all, it takes risk because suddenly Grayscale has those Bitcoins on their books until someone else actually buys it from them. And this is not in general what a fund wants. A fund wants to actually have the Bitcoins never on their books. They always want them in their customer because their business model is charging customers a 2% base fee on the assets. And that's going to be very relevant a bit later on, this 2% asset management fee. So what happened in 2020, suddenly this demand started rising, and Grayscale and all their friends, Three Arrows, Celsius, BlockFi, I'm pretty sure a lot of those names ring bells today. I think also Babel Finance was probably involved. This I'm not 100% sure, but there were a lot of funds. We at Cake DeFi got asked literally on an hourly basis whether we don't want to provide Bitcoins to the fund. So we would take customer Bitcoins and we would deposit them into the fund. Now, here is the super important model in all of that. We deposit the Bitcoins get locked for 6 months. This was just a process how it was set up. And after 6 months, I could then release the Bitcoins and I could sell the GBTC to the customer. And this allows Grayscale to have 6 months of basically free liquidity. And for you or for an investor, the interest here is to take the premium. Because if I just calculate on Bitcoin, I put a Bitcoin in, and then I know that the Bitcoin in is at 100%, but I can get a premium when I get them out. I can make a 10% premium on top of Bitcoin. Now, this has nothing to do with dollars. That's purely a Bitcoin trade. And that is what a lot of the Three Arrows, Celsius, BlockFi, and I don't know what they're all called did. And this went on for 2020 and 2021. And this caused a massive run because there was this massive premium in Grayscale Bitcoin Trust that got worse and worse and worse. And you can just track this. You just type in Grayscale Bitcoin Trust Premium and you go back to 2021. And this premium sometimes was trading at 20%. So that means within 6 months, you would pretty much have a guaranteed 20% return on your Bitcoins, right? So you put a Bitcoin in and you know, pretty much guaranteed that 6 months later, you would get 1.2 Bitcoins out. And that's what a lot of these firms did. Just want to highlight, we at Cake never did that. And now here's the point. Why did we never do this? Well, it is exactly how everything goes. This stuff works as long as there's massive demand. So all of Q1, tens of billions of dollars in Bitcoin got pumped into this fund. Then 6 months later, and this is when you have all these expiry periods, there were entire websites that were calculating the expiry periods. People could actually sell the GBTC and they would cash in on the premium as long as there was a premium. If you remember correctly, April last year, the market completely turned. Everything got super bearish. The BTC, though, are locked in this fund. It took a little bit until like July, June, whatever. During all these months, Grayscale got unlocked, and all these funds constantly sold the GBTC. Now, where did these funds have their BTC from? Very simple. They had them from the customers. So they borrowed them from the customers, promised them 6, 7, 8%, put them in there during this time, and then got them back out, hoped to cash in on a premium, and paid back the Bitcoin to the customer. Thought about a risk-free trade, realized, hey, if the market turns, this premium may actually disappear. And that's exactly what happened. The premium that these funds all pocketed on started disappearing and turned into a discount. And now it became a race for the door. More and more funds needed to get out. And all of them just wanted to get out. And that is what actually caused a lot of Bitcoins to be stuck in this fund. Everyone selling GBTC and what was a premium before turned into a discount. And this discount became worse and worse and worse. And right now we are at a record high of over 30% discount. That means if Bitcoin trades at 20,000 spot, GBTC is trading at almost 14,000. So you now may wonder, and maybe to kind of continue the story here, right? And again, I always give the same example. Only play the game if you know the other players and if you know the rules, right? And I think many, many people in the entire crypto space, when you tell these stories, they're not aware of these stories. And I know why, because the players, they don't talk about this stuff. This happens behind closed doors. The media doesn't talk about it because they get paid by the players, and the influencers out there, many times they don't have much clue, so they don't know what to talk about. And they just kind of talk about the price instead of actually talking about the fundamentals. So sadly, this is what's happening. So a lot of these funds pocketed massive losses last year in 2021 and tried to cover those losses by betting on all kinds of speculating stuff. And the results of that you all saw over the last 4 to 6 weeks in the media. And again, I'm fingers crossed. I really, really hope that all of you who have been using these other companies, and I'm not saying that what these companies did is wrong. I'm just saying it's very, very risky, and maybe this could have worked, but when it doesn't, that's always a big issue. And so that was kind of a massive thing. And I just want to explain to you, where does this discount come from? This discount came from way too many Bitcoins going into the market in Q1 into this fund. The arbitrage opportunity for Grayscale only works one way. So it only works on the way in. There is no way out. And the reason there's no way out is actually twofold. Now, at the moment, there's a 33% discount. That means there's about $10 billion. That's billion with a B. $10 billion that actually wants to go out, but can't. That's why there's a discount. For all of you who are good at math, 2%, which is the management fee, of 10 billion is how much? Exactly, 200 million. So Grayscale has two options. They either let those 10 billion out and lose 200 million a year, or they just keep the 10 billion in there, and hey, that's like an easy 18 million a month for doing nothing. Just to kind of understand the players and understand the rules. Then you understand how to play the game. It's in any game like this, right? When you play poker, understand who you're playing against. You play chess, same thing. You do it in investing, you play against the entire world. And there's a lot of people that are relatively smart.
But
So,
Julian,
yeah.
this is only 50% of the story, or what does it what would it mean
No,
if
no.
yeah,
Yeah. So, no,
please
so
go on.
the story continues. So Grayscale doesn't allow the arbitrage themselves right now. They could. And the reason they don't want to is mainly because of the 2% management fee. But then there's the second reason. Those $10 billion that want to go out, how would they actually go out? The way they would go out is they would go and actually sell BTC, because that is the arbitrage. The arbitrage is you buy cheap BTC at a 33% discount, and at the same time, you sell BTC, and then you convert the cheap BTC that you bought at a 33% discount into the Bitcoin that you just sold, and you cancel the trade out. So it's a pure arbitrage that at the moment would only be available to Grayscale. Grayscale is not doing it because they would be losing the 200 million a year. And there's a second reason. They would need to find buyers for $10 billion. And I don't know how you have seen the market and if you have been following the volumes on the exchanges, but the volume at the moment, especially over the past months, has been relatively slim, especially on the buying side. And on all the institutional products, funds are rather flowing out of the crypto products, not in. So Grayscale knows if they would settle this now, they would not only lose the 200 million a year, they would on top crash the price with a $10 million sell order to, I don't know what. This is now completely opinionated because I don't know where the price would go. Maybe the price doesn't crash at all. Maybe the market could easily handle a $10 billion market sell order. This wouldn't be market, but would be able to handle that. The other stuff, that's facts, that not opinion. That's complete facts. This now is opinion. However, when the ETF gets converted, when it gets converted into an ETF, that is when anyone can arbitrage it. So now you're wondering, why would Grayscale even want that? Because if it gets arbitraged, why would you want that people actually go and take 10 billion out of your fund where you have been making $200 million, and with an ETF you have a lower fee, so you're actually making less money, and then the price drops on top? That is because Grayscale, just like all the people out there, are expecting a lot of investors to come in with that conversion into an ETF. And so what they are absolutely hoping then is that the sell down of Bitcoin wouldn't be a net sell down of $10 billion that would just wipe out the price, and probably you would see Bitcoin under 10,000, but would rather only have a more minuscule amount and could actually create some hype, and they can sell those $10 billion into this extra demand. And then they would have to hope that this would not drop the price. From all the analysis, now this is fact. Now, all the analysis that I have seen, that I've personally done, I'm not sure if the $10 billion that anyone can arbitrage, right? In this moment when the ETF is there, if the $10 billion sell pressure can actually be covered by buying pressure. And we're not talking about pension funds here or 401ks, because they're not going to come in the first day. They're all going to take weeks and months. And so I actually think that the discount that GBTC has right now is not that the discount disappears. It's actually a mix of the discount disappearing and the Bitcoin price dropping. And so now the only question is, where would those two meet? Do they meet at where the GBTC price is right now? There's a lot of people who are actually calculating it to exactly there, who say the Bitcoin price would drop 33%, right? So that would mean it would drop down to whatever, $14,000. And then there's others say, no, it would drop way further, because if it drops to 14,000, why not go to 5,000? And then there's others who say it is absolutely crazy. There's no impact. Actually, this can easily be covered and the price would be going up. Or others say, no, it would be meeting somewhere in the middle. It would be meeting at 17,000. What I want to give you in all of this, and then Fabio, I'll let you kind of either ask questions or something. A spot ETF with Grayscale is actually way more bearish and way more a cautious kind of approach than most people would ever imagine, or most people are actually aware of. And that is an important understanding that I think, for some weird reason, the media doesn't talk about it. And again, CoinDesk is owned by Grayscale. A lot of advertising to Cointelegraph is done by crypto companies that for that is very, very important. A lot of the influencers don't understand that part. And so I'm surprised that a few people actually talk about this. But it is like factually correct. And so the only thing that you need to interpret that in that is how much buying pressure would happen in those first couple of hours where people can arbitrage it. And it's a risk-free arbitrage. I want to be clear, right? It's risk-free. You buy something at 14,000, and at the same time, you can sell it at 20,000. So you pocket 50% on your buying price right away because the discount is 33%. So the only question is, how many people are you going to find that you can dump this on? And that is going to be a very interesting question. So to kind of summarize, Bitwise only, I think very bullish because we don't have that issue with Bitwise. Very, very unlikely. Non-event, most likely scenario in my opinion. So I wouldn't worry so much about it because I don't see this event so likely happening. If Grayscale gets approved, I actually would think that this could be more bearish than bullish. And if this doesn't get approved right now, but maybe gets approved next year, maybe by that time, Grayscale has started to either getting pressure from the SEC that they need to balance their discount out. Maybe the market has turned and everything starts becoming a bit more bullish, and that helps balance the discount out. Or maybe we're going to see the same issue in a year. But I'd rather have us kick that can down the road than trying to pick up that can right now and understand if that can is still drinkable or not at the moment. Fabio, thoughts, questions, comments? Yeah.
Yeah, I love that you made that point, and it's super controversial at the moment, and nobody's talking about this. Like you made that point, I think 3 weeks ago for the first time, and you had several smaller discussions with. I saw that one with Rand Neuer, where actually he said the same thing. Nobody's talking about this, and this is like one of the biggest things connected to Bitcoin ETFs. So in my mind, so you stated facts. So there is no discussion about that. The only discussion in my mind is the timing and the actual buying power. So let's just say if the Grayscale ETF actually gets approved next week, this is probably a buy the rumor, sell the news event, because right now the buying power is just not there. If you look at volumes, they're way down. There is not a lot of buying power right now. You can see that on the price itself. The price is just moving sideways. So if we would get a spot ETF next week, it's probably gonna lead to a small run up until the ETF actually hits, and then you have exactly what Julian just explained. You have this big arbitrage opportunity that suddenly opens up to everybody, and it would probably result in a pretty drastic drop. But I guess it all comes down to two factors. One is the timing of that ETF. So if this is going to be next week, it is definitely happening in a bearish phase, and there is not a lot of buying power. So the point that this will lead to a big sell-off is super valid. And the other one is there is one variable in this whole discussion, and the variable is who is actually coming in. Are there so many buyers waiting on the sideline? Is there so much interest in a spot ETF? And this is just we cannot put a figure on that. Like, of course, there are public figures like Kevin O'Leary that says there is $1 trillion US waiting on the sideline if regulations are clear. Yeah, but
let me add something. I do believe that. The question though is this $1 trillion just like waiting right now, and the first second this thing starts trading, this money is in, or is this gonna take months and maybe a year? And I don't know, like I don't know what your perception of large institutions is. Are they rather the little speedboat that's like decision is today, board meeting, everyone is like, sure, doesn't matter what the risk is, let's get going, let's dump $1 billion into this? Or are they more like, let's watch this, we need to get a board meeting, then you have a bunch of 70-year-olds kind of meet together. Oh no, I need to play a round of golf, let's meet in 3 months. Okay, great, let's sit down. CFO needs to present, 3 people object, lawyers need to kind of talk, and then like a year later stuff gets happening. I mean, I don't know, make up your own mind, right? Again, I have just as much knowledge as you do. I don't think Kevin O'Leary is wrong. I actually think he's right. The question is just the timeline. And that also brings me to one thing. Just because I'm maybe bearish short term on a Grayscale spot ETF, I'm actually very bullish on the long term with that. Super bullish.
Yeah, I fully agree. So bigger institutions will take their time. It's not going to happen on the first day. But all these arbitrage traders, everybody that is interested in making And this is probably a risk-free trade, not like the premium. The discount is probably a risk-free trade, at least for the people that are fast. So you're practically putting a honeypot out there of currently 33% arbitrage opportunity with a 10 billion price tag on it. And everybody that is fast enough can practically make a risk-free trade. So I think you're spot on when this is probably going to lead to a dump initially, but in the long run, of course, the spot ETF is fantastic, and it will eventually be a bullish thing. So we're talking about a short time frame. How long to arbitrage out a 33% discount? 10 billion? Nobody will know if this is a question of hours or days or weeks. Yeah, it depends on.
I mean, if markets are efficient, right? And let's say the most probable scenario if Grayscale gets approved happens, and that means also Bitwise gets approved, then I would assume as soon as the deadline kind of moves over, then arbitrage traders start speculating already. They're going to start buying GBTC. They're going to sell short BTC. And that will probably start Wednesday evening, Thursday morning already, right? So if Wednesday evening, Thursday morning, there's no adverse news against, like there's no Bitcoin spot ETF for Bitwise, you should already be anticipating that the discount starts shrinking. And at the same time, the spot price should be going down heavily. And then the question just is, where is it going to meet? And so if at that point, though, people are like, oh my goodness, the spot ETF is there, Bitwise is there, the news is going to come in. And then there are people who are actually going to catch that, no problem. It may actually be fine. It's just that I personally think the arbitrage traders are going to be way more aggressive because they have absolutely no risk. There's zero risk in this trade if Grayscale goes through. There is none. And those people who are actually buying, they do have a risk. And so that is where the big question just comes in. And it's going to be interesting to see. First of all, I think we sadly are not going to see that experiment. And sadly, I mean, maybe happily, it would always be sometimes I would be curious to kind of see how these things would actually play out. But in this case, I'm glad because I would actually have a bit more of a bearish kind of outlook. And then we would see how efficient the market actually is.
100%, and maybe to reiterate that for everybody that missed the first half of the Twitter space, both Julian and me give it a very low likelihood that these ETFs get approved. And if we are waiting, if they need to sue the SEC or reapply for an ETF, this is going to take a while. So we are probably talking about, I don't know, early 2023. And of course, next year, it's very likely that we have a different kind of market sentiment, and with a different kind of market sentiment, maybe more buying power, the whole arbitrage opportunity or the buying power that comes in through the ETF will be a different situation. But if this is approved next week, yeah, there's a big opportunity if you want to do some arbitrage trading.
Definitely. And again, disclaimer, like Fabio, myself, we have no inside information in this. This is purely public information. We're trying to present some facts. We're trying to build our own opinion. Our opinion may be completely wrong. It's unlikely that the facts are wrong, but our conclusions are maybe completely wrong, right? So, as always, make sure that the facts are correct, and then don't listen to someone else's opinion. Build your own opinion based on the facts. And then kind of compare your conclusion with someone else's conclusion and understand how did I get to this conclusion versus how did the other person get to the conclusion. At the end, I mean, I know it's like shocking to have to say this, but in today's day and age, like we are far away from people thinking for themselves. And they're way more on the train where they just follow someone else's opinion and then whatever, blame everyone else for their own decisions. So keep that in mind. Zero financial advice here. The only financial advice I give you is get the emotions out of the game. That's the financial advice I give you. I'm going to give you zero financial advice on whether you should be trading this thing, if you should be long, short. My honest personal setup here is I'm not trading this thing. If the Bitcoin ETF would get approved, I would probably also arbitrage it because I would see the risk very short. If I have a chance in actually arbitraging it, because I do actually expect markets to be super efficient and the sharks jumping in within minutes. And so, yeah, so just but I want to highlight zero financial advice. Like this may be completely wrong. The analysis of the facts. The facts are 99.9% correct. So yeah, just that is a bit of a reminder.
Maybe to finish this off with actual financial advice. Today is new moon, and if you're if you're interested in astrology TA, new moon means we are pumping into the new moon, which is actually kind of happening right now. But afterwards, this usually results in a dump. Please treat this information with caution. This is not really financial advice. We just I follow a few of these astrology people on Twitter, and I think it's super fun
Who
to
is
see
like
their
the
take.
number one person to follow for astrology to like
Um,
know
there is a girl, and she's called Marlene, I think. Let me actually check. Uh, Give me 1 or 2 minutes to find that
I want
out.
to know, does she ever get stuff right? Like,
She, oh yeah,
or
she
is
does.
she more like the chart traders that are like, it could be this, it could be that, and I'm gonna like whatever, and then at the end they're always right.
No, she underlies all of this with, so she basically does a lot of full moon and new moon, and it also like there is actual scientific studies done on this, that full moons and new moons have some kind of impact on us as humans. So if you're into for example into sailing or nautical things, you know that the moon moves water, and we are like 75% water, and this is a little bit of where this comes from. And she actually posted a tweet, I think on 1st of January, where she marked two dates. And I think the first two dates that she marked were like no, May 16 and June 15. Uh, and then she just puts one word next to it. She doesn't say, okay, there's a pump coming or there's a dump coming. She just names a few dates and says these are big dates where something is probably very likely to happen. But let me look into my Twitter search for just 1 second.
Yeah. Yeah. So for everyone listening to this, please, I mean, this is obviously quite substantial. Again, I still think that the probability is very low, but this is personal judgment. All the info on all this, I mean, is like just simply use Google. It's so easy to get to all the info. Bitcoin premium 2020, 2021, involvement of Three Arrows, Celsius, BlockFi, and I don't know how many, the entire 6 months lockup period, the unlocking in the summer of 2021 that everyone was kind of watching, Grayscale going into a discount, the discount getting worse, Grayscale getting 2% assets under management fee, calculating the discount based on the total assets, this being around 10 billion in an ETF, everyone being able to arbitrage this thing. So, I mean, none of that has any any information that like is inside information. It's actually all publicly available. So the only thing that people need to do is actually put the puzzle pieces together. And it seems that some people just don't want to do this on purpose, and others just can't because they're actually missing the puzzle pieces, or they don't think for themselves to actually consider how those puzzle pieces would fit together. So probably though we're gonna have next week's Twitter space, and it was a non-event. So let's see on that.
By the way, for everybody that is in this Twitter space, I posted the tweet she made yesterday. The girl is called Maren or Maren. This is at Maren Altman here on Twitter. If you want to look it up, there's definitely a lot of entertaining value in this.
I think I've seen her before.
I will not use this for
My
financial
goodness,
investment.
she has 230,000 subscribers. Wow.
Yeah, it's becoming a thing, slowly but surely. And yeah, I definitely find a lot of entertaining value in this. I would not base any investment decisions upon astrology, but maybe this is a valid thing. You never know.
I mean, okay, when I see a tweet like that, I mean, that woman is probably a very smart woman, but I tweet like new moon in Cancer is a highly sensitive new beginning, empowered by external encouragement. We may have the help of a mentor or support system that has led to newfound confidence in our own capabilities. It is extremely well aligned and a great opportunity. Yeah. Try to
What a
tell
note.
my medical brain. Yeah, I don't know. Don't get me down that road. Great. Thanks for sharing that, Fabio. Yeah, cool. Do we have any other points or any other things to make? I mean, at the end, let's see what happens. That's it from my side. I give you all the value nuggets I have. I'll do a summary of that in like 10 minutes on my English and German YouTube channel. If you just want to have the 10-minute summary version of that a bit later today. So yeah, so you don't have to the entire details. So you don't have the detail. You have more of a summary and bite-sized kind of nuggets. Yeah, but other than that, thanks so much for joining from my side. Subscribe, follow, like, retweet, share. Obviously, if you're not using our company Cake DeFi, then hey, this is your chance. We have hired 60 people this year. If you want to work for a fantastic company, apply. Fabio, I'll leave you with the last words.
Yeah, thanks everybody for tuning in. We are definitely going to revisit what happens with the whole ETF scenario next week's with next week's Twitter Space. You can also find this on YouTube, on Apple Podcasts, on Spotify, and yeah, thanks everybody, and see you next week.
Bye bye. Stay safe. Stay healthy. Thank you.